In the shadows of financial markets, there's a storm brewing. An unassuming metal, silently backing the world's technology and industries, is poised to outpace the esteemed heavyweight of commodities, gold. It's not just a shift, it's a seismic tremor that's rattling through the depths of financial systems. What we're witnessing is nothing short of the dawn of a new economic epoch. For decades, gold has been lauded as the ultimate safe haven, the immovable object against the tumult of geopolitical and financial chaos. But now, glance at the numbers. In mere months, the gold-to-silver ratio plummeted from 100.1 to a mere 59.1. A level unseen since tectonic shifts last rocked the economy 13 years ago. At the peak of 2011, that ratio had managed to hit an even lower mark, 31.1, a whisper of history echoing through the present. This is not by mistake. It marks a critical transition, a prophecy of the spring-loaded nature of silver, where its slow start gives way to accelerated gains. What appears as a humble industrial anchor is quickly transforming, catalyzed by forces too compelling to ignore. The silver market's volatility, once seen as a curse, now heralds untapped potential, ready to be seized. Now, examine closely the forensic blueprint of this change. Witness a world in 2026 where the geopolitical theater sets the stage. January's tableau vivant at Davos illuminates a shifting power play, where silver's narrative intertwines with geopolitical tensions. U.S. ultimatums and Arctic ambitions highlight a new transactional diplomacy. Unsettled treaties and tariff threats send shivers through markets, triggering a retreat to metals as bastions of security. Look beneath these surface tremors, and you uncover the hidden engine of this movement: strategic deficits and unprecedented demands. As industrial applications from AI to solar energy surge, so too does silver's indispensability. Consider the impending physical deficit, further aggravated by China's strategic chokehold on exports. This isn't a shortage, it's a calculated scarcity, a throttling of global supply that contrasts with prevailing narratives of abundance. Moreover, the echo of COMEX and LBMA's emptying vaults isn't just a statistic, it's a harbinger, turning these vaults into echoes of their former glories. As leases skyrocket and real prices soar above official indices, reveals a stark reality. What was supported by paper now demands cold, hard deliveries, a dilemma for banks and holders alike as the specter of shortage becomes palpable. Now draw a breath and recognize the urgency, a point of no return. The silver horizon challenges the misconception of its cheapness, urging capital to reconsider its allocations. As silver closes in on psychological thresholds, imminent shifts loom. Analysts from Citigroup to Bank of America set sights not only on $100, a once unimaginable target, but on projections soaring to $150 and beyond. Silver's allure transcends the mere financial, embodying both a strategic asset and a monetary anchor. It becomes the last refuge, holding against the financial flood, even as margin manipulations threaten fleeting halts. The paradigm must shift. These aren't just speculative ripples, but harbingers of inevitable change in the global fiscal landscape. This is not a fleeting bubble. It's a foundational transformation in how we value stability and opportunity. What was overlooked will soon be the centerpiece, forcing a recalibration in perceptions and priorities. It's a call not simply to invest, but to awaken to the changing tide. A call to witness the ascendance of the silver age amidst a dawn of new financial realities. Imagine awakening to a future where silver, long the undervalued sibling of the glittering gold, transforms into the keeper of wealth. For years, the perception of silver as mere industrial material meant its worth was tethered to earthly needs. But today, the landscape shifts. A storm brews on the financial horizon, driven by unseen forces, a perfect confluence of geopolitical maneuvers, industrial revolutions, and a recalibrating global economy. Gaze backward to see the historical stability of the gold-silver ratio unraveling. Once unwavering at 100.1, the balance now tilts dramatically to 59.1, an ebb reminiscent of tides unseen since the days when the world's economic landscape was altogether different. The dormant promise of silver, a slumbering leviathan, now stirs. If history repeats itself and the ratio compresses further to its past valley of 31.1, imagine the ripple it could send through markets. Look further inward, and you find the intricacies of this spring mechanism. Silver, traditionally the shadow player, often starts behind in the race, but possesses a unique vigor, a volatility that belies its initial inertia. This dual nature, simultaneously understated yet volatile, positions silver for a surge, shattering the false myth of its undervaluation. But don't be fooled into thinking these numbers are abstract. The dry data belies a story of urgency, of fortunes yet unmade. Silver, overshadowed no longer, promises explosive growth. As shortages loom, fueled by geopolitical tensions and strategic embargoes, the cost of hesitation increases. With China's grip tightening and strategic materials recalibrated as potential weaponry in the global power play, what was once readily accessible is swiftly becoming rare. Stand on this precipice, the point of no return. The patterns of the past give way to an emerging reality. The facades we once trusted crack and reveal an underlying truth. The window for capitalizing on the silver ascent narrows as swiftly as it opened. The final act comes not with crash and derisive laughter, but with a whisper of inevitability, a call to adapt, to survive, to thrive within the dawn of the Silver Age. In this redefined landscape, value is remeasured not in numbers alone, but in foresight, adaptability, and the sheer audacity to seize the opportunity residing at the very threshold of our collective consciousness. This is your moment. The choice lies not in whether silver will rise, its ascent is preordained, but in when you will choose to see beyond the gleam of gold, to grasp the unassuming strength lying in silver's reflection. Step into this new world and recognize it for what it truly is, a realm where silver claims its place at the table, not as a guest of fortune, but as a sovereign lord of wealth. The world has entered a new phase. A hidden signal has been sent, and it's one few were prepared to receive. The gold-silver ratio, that ancient barometer of wealth and stability, is unraveling at breakneck speed. Once 100 parts gold to a single part silver, the balance now teeters at 59-1, sending shockwaves through markets and sparking whispers of change. But look closely, this isn't a glitch in the system. It's the drumbeat of an awakening giant. Silver, the white metal, long considered gold's lesser kin, is emerging from its shadow. If the ratio plunges further to its 2011 low of 31-1, can you fathom the impact? With gold currently shining brightly, a reversion to such historic levels would catapult silver's price to a staggering $150 to $160 per ounce. The market is alive, a living entity reacting to tectonic shifts unseen in decades. We must understand the so-called spring mechanism. Silver often lags initially, a shadow delayed by convention, yet it holds latent potential, energy building like a coiled spring. Its volatility is both curse and blessing, explaining why cheap silver is a fleeting fantasy. Once the spring releases, the ascent can be nothing short of explosive. The transition is not just economic, it is philosophical. The contrast between publicly perceived narratives and the raw, unpolished truth is unmistakable. The stability of gold is being overtaken by the strategic indispensability of silver. As the world veers towards tech-based economies, silver, the linchpin of electronics, solar power, and more, becomes indispensable. Its character as both a precious metal and industrial necessity creates a dual demand that gold doesn't possess. Geopolitical tremors add further urgency. The financial world stands on precarious ground as the Davos ultimatums reverberate. With geopolitical knives sharpened over Arctic claims, trade dynamics have morphed into tools of modern warfare. Amidst talks of territorial acquisitions and territorial sovereignty, the investment in safe haven assets becomes imperative. The market dynamics of silver are set against this backdrop of crisis and opportunity. Shortages loom large, intensified by strategic national policies like China's embargo on silver exports. Add to this the cash grabs from exchanges like COMEX, where physical silver departs vaults faster than it's replenished, and you witness a systemic squeeze, a high-stakes poker game where only the savvy survive. As we are thrust into this new reality, the veneer of traditional financial structures begins to slip. Where trust falters in paper assets, tangible value rises in the form of silver. The once obscured reality is now undeniable. The future is metallic, painted in the versatile hues of silver's reflection. The choice is clear and immediate. Witness the transformation not as an observer, but as a participant. The old world order, where gold held the crown, fades into history. Silver claims its throne, not as a pretender, but as a rightful heir to the wealth of empires. Embrace this evolution, for in it lies both promise and power, the dawn of a new age where silver is not merely an adornment, but the backbone of a redefined economy. Are you ready to invest not just in metal, but in this unfolding era of transformation? We find ourselves at a crossroads, a juncture of seismic economic change. Imagine a world where the traditional kings of finance are replaced, where the perceived stalwarts of wealth feel the tremor of dethronement. The harbinger of this shift? Silver, that understated metal, now ascends with force, disrupting the equilibrium once dominated by gold. Consider this. For 8 months, the gold-to-silver ratio has nosedived, from a staggering 100.1 to a mere 59.1, levels unseen in over a decade. This is not just statistical noise, it's a roaring signal, an alarm bell ringing in the quiet halls of investment power. If the trend continues and the ratio tightens to that historic low of 31.1, silver's price could soar, possibly breaching $150 per ounce. Here lies an opportunity and a reckoning. From an analytical standpoint, the scenario is clear. The spring mechanism of silver is compressing, storing potential energy ready to propel itself when released. This volatility is not a flaw. It's a defining characteristic. It signifies potential, a hidden capacity for rapid appreciation, while investors debate over short-term stalls. The geopolitical landscape further compels urgent action. World leaders, clashing over territories and global policies, are unbeknownst architects of silver's newfound ascent. The economic strategies unveiled at high-stakes summits like Davos ignite shifts in markets that are as volatile as they are transformative. When rational monetary policies are overshadowed by unprecedented geopolitical moves, like demanding the acquisition of nations' territories, silver emerges as a beacon of stability and opportunity. In the trench of market operations, the ripples become waves. China's strategic export embargo, reclassifying silver as a strategic material, throttles the global supply chain. COMEX and LBMA, the very bastions of precious metal trade, are under siege as physical silver withdrawals push their reserves to wafer-thin limits. Lease rates spike alarmingly, heralding an era where securing the metal becomes a new kind of gold rush. The divide between paper and physical form is growing, a schism where digital promises fall short to deliver tangible reality. Banks teeter under the weight of massive losses from short positions, as unprecedented demand forces a gut-wrenching buyback, filling their vaults at soaring prices. As this narrative unfolds, the inherent contradictions between economic theory and practice widen. Traditionally, robust GDP growth might bolster a currency, forcing metal prices lower, yet current conditions paint a different story. The specter of inflation stalking an economic landscape, coupled with shady backroom federal maneuvers, circles back to one irrefutable truth. Trust in paper is waning, and silver, in its physical form, is reclaiming its status as an anchor. The current trajectory is clear. We've reached a fever pitch of economic evolution, not merely a financial snag. Silver's trajectory hints at more than currency valuation. It's about repositioning the world's resources. The transformation underway is as much about mindsets as it is about metal. Thus, the task lies before us not only to observe but to engage, to invest, not just in a physical asset, but in the promise of a future reimagined. This is no passing trend. It's a shift towards a new world order where silver is pivotal. To delay action is to risk being left in the past, as the future glimmers in the silver reflection of this new economic dawn. Are you ready to stake your claim in this unfolding tale of silver supremacy? Take heed, for silver is not merely waiting to be discovered. It demands to be recognized, to be a part of your future. An anomaly unfolds before us, reshaping our understanding of economics. The age-old gold standard finds itself shadowed by the sheer momentum of silver. We stand at the brink of a new paradigm where the gold-silver ratio is no longer a predictable metric, but a volatile indicator of impending transformation. In just 8 months, the ratio has plummeted from a staggering 100.1 to a striking 59.1, a threshold unseen in over a decade. Take notice of the evidence at hand. This isn't just numerical fluctuation, it's a seismic shift. The year 2011 lingered at low levels of 31.1, and if silver cruises back to such values against today's gold rate, expect prices to rocket beyond expectations, breaking past $150. This shift is not confined to charts. It is a reflection of deeper mechanisms at work, an uncoiling spring ready to launch. Silver, often underestimated at the race's starting line, eventually eclipses with blistering speed and volatility. The notion of cheap silver dissipates as the ratio edges towards 30, revealing the myth for what it is. Take a good look at the data. The markets reverberate with turbulence. The recent report from January 2026 recaps 2 days of unprecedented activity, signifying silver's evolution from mere industrial material to a strategic asset of global importance. This isn't just economics, this is geostrategic chess. Behind closed doors of power, like the World Economic Forum in Davos, key decisions fuel these sweeping market moves. The abrupt recategorization of silver by China echoes loudly against the global marketplace. Throttled supply etching irreversible footprints across market floors. Across the corridors of COMEX and LBMA, reserves shrink calamitously low. A modern mining stampede underway, seeking not gold, but silver. Demand grows ruthlessly, and the chasm between paper derivatives and physical assets crashes open wide. Staggering bank deficits from short silver positions have triggered an urgent buyback crusade, transforming balance sheets and geopolitics alike. We are facing a colossal disparity. The theoretical versus the tactile. What once reinforced stability now introduces systemic risk, setting the stage for an epic remake. Today, the traditional lens, strong GDP, means a robust currency and weaker metals, fades into obsolescence. Inflation stalks the economic front lines, unchecked by past assumptions and current political ploys. Market confidence tilts, and now it's the tangible gleam of silver that draws believers, as a safe haven and steward of value. Mark this moment. It is not a glitch, but the culmination of intersecting crises tugging at the fabric of modern economics. Silver does not merely stand as a commodity. It rises as an emblem of trust and resilience in turbulent times. The era that unfolds will place silver at its core, a new world economy in gestation. Are you poised to secure your share of this silver surge? The narrative of silver supremacy rests not in grandiloquent forecasts, but in the tectonic forces at play, reconfiguring market landscapes and psychological horizons. It's a time to see beyond the immediate glint of metal to its potential to safeguard and grow, a time to act, while the opportunity still beckons. Embrace this transformation, seize upon the veracity and utility of silver, and align with history in the making. The race is not just for resources, but for foresight into the new silver era dawning ahead. Amid the clamor and clatter of global markets, a quiet revolution is unfurling. A glistening symbol of industrial prowess and hedge against uncertainty, silver is emerging, not just as another metal, but as a harbinger of change. In the span of months, the echoes of its impact have moved from speculative whispers to undeniable reality. Let's consider the pivotal shift in the gold to silver ratio, a metric once thought immutable, now unraveled. In just 8 months, this ratio has plunged from a towering 100.1 to a startling 59.1. And here's where the real intrigue lies. Should the trend continue towards its historic lows, we could witness silver's price catapulting to astronomical highs, far beyond today's projections. This isn't mere conjecture. It's an unfolding narrative that challenges the conventional wisdom. Silver, that once played the quiet understudy to gold's leading role, is stepping into the spotlight. Its role is no longer confined to industry, extending into the strategic reserves crucial to global stability and economic security. Influential players like China now categorize silver as a strategic material, indicating shifts deeper than mere market volatility. This simple act of classification has created ripples, constricting supply chains and spiking premiums, a telltale sign of serious revaluation. In the immense vaults of COMEX and LBMA, what were once considered safe stockpiles now appear alarmingly depleted. A rush, akin to a modern-day gold rush, is underway. But the commodity in high demand is not gold this time, it's silver. The price dynamics are telling. The markedly aggressive upward trend in January 2026, spurred by geopolitical tensions and economic disclosures at Davos, pushed silver to new heights, its 221% yearly yield defying traditional market logic. This is the spring compression, a potent force poised to unleash energy that has been dormant for years. As the pressure mounts, institutions scramble to cover their shorts, generating a cascading effect that drives prices higher still. The squeeze is real and the display of force undeniable. Now, this isn't merely a fluctuation in market statistics. It's a phenomenon manifesting the vulnerabilities and reconfigurations within economic paradigms worldwide. Silver is revealing itself as more than a monetary relic. It's a sentinel of changing times. Fractures in long-standing financial theories are evident as traditional hedges waver under the weight of geopolitical uncertainty and economic tumult. The unfolding silver story is one of strategic recalibration amidst a backdrop of global economic tension. And here, caution for some becomes opportunity for others. As investors awaken to the dazzling possibilities silver offers, one must ask, can you afford to overlook it? When supply chains falter and financial doctrines show their age, will you choose the stolid, atypical beacon that promises resilience? Silver isn't just on the rebound. It's redefining what we know of wealth and safety. The epoch of complacency in traditional commodities is fading. Silver isn't the alternative. It's becoming the protagonist. In times when control shifts from one power to another, when old safety nets disband, an understanding of these ripples becomes not just advantageous, but essential. As we stand on the cusp of a silver revolution, this isn't just a trend. It's a movement carving a route forward, dictating new terms for those who would heed its call. Embrace the metal that tells a story of resilience and foresight. Seize the moment before hindsight makes it too late. The race has begun. Don't find yourself left behind in the narrative of silver's ascent. Let's rewind to a time not so distant, where gold reigned supreme in the arena of precious metals, a steadfast guardian, a symbol of permanence. But below the shimmering illusion of gold's unyielding dominance lies the underestimated prowess of its often overlooked cousin, silver. We've entered a new phase. The gold to silver ratio is collapsing. For those who have bet on gold, beware. The radiance of the white metal is casting longer shadows with each passing day. Casting our gaze over the past 8 months reveals a dramatic scene. What was once a towering ratio of 100 to 1 between gold and silver has spiraled down to just 59 to 1, a number not breathed since 13 years back. And if silver dares to tread once again towards its historic low of 31 to 1, a threshold marked last time in 2011, its price could soar beyond $150 or even $160 per ounce. Consider this the calm before the inevitable storm. Zoom into the heart of the market, and you will witness the mechanic precision of a spring being compressed to its breaking point. For too long, silver has played the role of the tortoise in the race, trailing gold. Cloaked in the myth of being cheap, yet the tale is far from told. As history unveils, the slow and steady may just have the last laugh. February is witnessing unprecedented market tremors racking the dwarfish realm of silver. Consider these numbers not mere digits. They are signals, shouts from the market abyss. The dynamics of exag USD over a span of mere 48 hours have shattered ceilings and reached untold zeniths. The conclusion? Silver's time as a strategic asset is cemented, transitioning from an industrial backlink to a linchpin. Look at this specific detail. Within 2 days, the value of silver surged to new heights. The gains steered by geopolitical bombshells unveiled in Davos, a cascade of geopolitics smashing against economic cliffs. The market, shackled before, erupted into a frenzy as institutional fortresses once reliant on mean reversion slumped in their self-imposed snares. The scenario laid bare a truth. Rare are moments when the market itself confesses vulnerability. But delve deeper. Beyond the figures are visceral movements and a churning tide. What do tariff ultimatums and declarations about Greenland whisper to us? Here emerges the unsuspected villain, actor yet non-entity, the systemic shift, threatening trade chains and depleting vaults of undeniable resources. Everyone sought solace in hard assets, seeking refuge from the geopolitical squall. Amidst this perfect storm lies a staunch truth. Investors are no longer mere players on the board, but pieces cast in the throes of unforeseen recalibration. It isn't just inertia that propels silver. Industrial demand, driven by AI data centers and solar panel manufacturers, clings onto silver, fueling the insatiable furnace of forward motion. Take note, solar alone will soon devour more than 20% of silver's yearly alchemy. Indeed, the silver rush isn't just material or fiscal, it's emotional, teetering on the precipice of greed and foresight. Those adept at reading these signals are, even now, repositioning capital from the overheated realm of gold into the gleaming launchpad of silver. The clock ticks away as they navigate the matrix of value before others shudder at the sound of opportunity lost. Comprehend this. Complacency is obsolete. The status quo is shifting. Narratives of wealth and safety are undergoing renaissance. Silver isn't merely an ascension, nor is it simply situated as the second choice. It is probing the very membranes of what an era of strategic assets envisions. As the spring coils further, can you sense the inevitability coiling too? Two futures stand before us, the complacent past or the dynamic future. In this epoch of amplified recalibration and unveiled possibilities, will you grasp the sphere of opportunity before time's relentless flow makes it unreachable? Silver's not just having a moment, it is resurfacing to redefine financial reality. The curtain rises on this watershed epoch. Seize the tale now, or read it in regretful hindsight. Because in the theater of commodities, silver is now the star. Welcome to the age of flux where ancient norms crumble under modern pressures. Look closely, and you'll see a seismic shift in the dance between gold and silver, one that rewrites the rules we once thought immutable. The gold-to-silver ratio, long a steadfast indicator, is now teetering on the edge of reinvention. Consider this. 8 months ago, the ratio stood at 100 to 1. Today, it hovers around 59 to 1, a number unseen in 13 years. We are witnessing the destruction of a myth, that gold is the supreme guardian of wealth. When silver returns to its historic low ratio of 31 to 1, imagine its potential. Picture it exploding in value, soaring beyond $150, heralding riches for those who dared to foresee this tectonic shift. The orchestration behind this upheaval is a tale of economic mechanics, a spring winding tighter and tighter until its release becomes inevitable. Historically, silver appears lethargic at the outset, trailing gold. But don't be fooled. Its delayed acceleration is like that of a champion runner, surging ahead with dizzying speed once momentum takes hold. Turn to the recent numbers, and you'll see the undeniable stirrings of change. Within a mere 48 hours, silver's price surged amidst unprecedented volatility. The reasons are not only economic, but carved into the bedrock of geopolitics. Statements at the World Economic Forum in Davos, a stage for power plays and threats that could realign nations, added petrol to the fire. So why silver, and why now? Technological appetite is insatiable, with silver as its feast. The demand from AI data giants and solar industries is but the whisper of a roaring future. A single solar panel may seem mundane, yet it guzzles up to 20 grams of silver, and its industry's hunger swells daily. See the gap in reality. A chasm between fiat fantasies and elemental truth. It's not just price predictions that are shifting, but the foundational understanding of wealth. The paper games of markets are quaking under the pressure of physical scarcity as silver vault stocks diminish alarmingly. This isn't just a run on silver, but a grasping of reality in a world turned tenuously unreal. In this tale of strategic chess, we reach the ultimate gambit. Two roads diverge before us. One clinging to the past where gold reigned supreme, and the other embracing the audacious future of silver's dominance. This is the critical moment, the point of no return where the discerning will flourish or fall to dust. A new paradigm beckons. Comprehension here isn't just power, it's survival. These aren't crises we face, they're transitions. Could it be that we're not witnessing the decline of a trusted metric, but rather the dawn of a new epoch? Understand this. The world turns, silver ascends, and those who grasp its coattails may just find themselves lifted alongside the changing tides of history. As this age of silver emerges, choose not passivity, but proactivity. Witness these revelations not as distant observers, but as engaged actors, steering through the maelstrom of market metamorphosis. Because when the dust settles and the silver story is etched into the annals of time, those who understood and adapted will find themselves not just witnesses, but architects of a groundbreaking chapter in the saga of wealth.